Welcome back to Market on Close. I'm Marley, Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. We'll close today's show with some final thoughts on the session. We're in the 9th day of the government shutdown with seemingly no short-term funding in sight. The Senate voted for a 7th time today on dual funding proposals, but failed to meet the 60-vote threshold required for the passage of either one. Investors are increasingly concerned that the stoppage is about to start hitting the U.S. economy, already potentially seeing some impact. Airports nationwide experiencing delays this week as we deal with a shortage of air traffic controllers. The IRS also saying it's going to have to furlough nearly half of its workforce as a result of the shutdown. The first payday since the shutdown is supposed to be tomorrow, affecting about 2 million civilian government employees and 1.3 million active duty members of the military. And we did see the market move downward, as this uncertainty with the shutdown continues. But Netflix is the other one that stood out to me. It's going to let you play games on your TV starting this week. Netflix subscribers can play games on your smart TV or through a streaming device like a Roku. You'll be able to go from watching K-pop Demon Hunters, which is a popular one in my house, to playing games like Lego Party, Pictionary, Tetris, and Party Crasher. And they're free if you're a Netflix subscriber. And Lego Party normally retails for about $40, so a good deal there. Players can use their phone as a controller. You just scan a QR code on the screen, and then the gameplay will appear on your TV. And I always find what Netflix is up to really fascinating. This move into gaming, could be very exciting for them. Sam, what caught your eye today?
Yeah, you know where I'll be on the weekends, playing Tetris on my TV. Well, we got a broad temperature check on the consumer today, how they're traveling, how they're buying, eating, drinking, and what they're wearing. Delta set the bar high for the rest of the airlines with that strong quarter and guidance. They sold more, spent less, and had a high-end customer to thank for that. And U.S. customers are actually making up for some of the softness in international. Meanwhile, PepsiCo is also seeing stronger growth internationally, which is offsetting weaker growth in the U.S., where consumers, as we've been talking about, are cost and health conscious right now, though it is seeing improvements in soda. Speaking of value hungry, as we've been saying, Costco was one of the big movers today after the company reported better than expected September sales. They were up 8% year on year for the 5-week period to $26.58 billion, while comparable sales rose 5.7%. We do want to hear more, of course, about what Levi Strauss has said on this call, which is going to get underway in just over half an hour. I'll just get you across the headlines here. It was a beat on EPS and revenues. They've also raised their guidance. It looks like their margins have actually come in just slightly better than expected as well. And if we also look at what the company has been saying, they're talking about the macro environment remaining complex. So, as I said, Marley, obviously we want to hear about how they're also navigating tariffs and pricing as well. But heading into tomorrow, it's Friday. What will you be looking out for?
Well, we won't be getting any government data tomorrow, but in its absence, I'm going to shift my focus to the earnings that we have coming up. Next week is a huge week of earnings. Monday, the market is open, but it is a holiday, so no earnings that day. But Tuesday, we will get the beginning of the big banks. We're going to have JP Morgan Chase, Wells Fargo, and Goldman Sachs. So definitely keeping an eye on those. And also, it wouldn't be a looking forward if I didn't mention something about the Fed. Chicago Fed Pres Austin Goolsbee will be speaking tomorrow as well. And we didn't get much of anything from Jerome Powell today, so I imagine a lot of ears will be listening when Goolsbee speaks, as he's been a bit outspoken of late. Sam, how about you?
Yeah, it was interesting. Well, we got Michael Barr today, which was certainly interesting about sort of the cautious approach that the Fed should be taking right now. Nothing predictable one time off about these tariffs. So that's certainly an interesting point that he made as well. Pointed to the vulnerability of the jobs market. So, I mean, as we have no data to really work with coming from the government, I suppose we're just sort of hanging on to every word these officials say. But what we will get tomorrow, hopefully, is that consumer sentiment from the University of Michigan, Marley. And this really gives us a sense of how people are feeling about the economy and personal finances now, but also in the future. So last month, remembering, sentiment did fall to 55.1, and that came off 58.2 back in August. Remember, we get this twice a month. One is a preliminary reading, one is an adjusted. But these were largely on concerns about higher prices and also the labor market. Now, consumers are feeling the pressure from both sides, which of course are both sides of the Fed's dual mandate. And this is coming with the risk of higher inflation and also a weakening jobs picture. So what's interesting about this is it's also being reflected across the board, regardless of your age, income, and demographics, according to these surveys. So with consumers, big stock holdings, they seem to be feeling a little bit better about things. We've seen that in a number of consumer sentiment surveys. But really what we want to see, Marley, now from this is whether that trend is continuing as far as going down or whether we are seeing some improvement there.
Absolutely, Sam. And that's going to do it for us today on Market on Close.